Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for making time.
Good afternoon.
Well, the U.S. Congress has almost unanimously passed a bill in support of the pro-democracy protesters in Hong Kong, China demanding the U.S. stop interfering. So there's a concern this might jeopardize the trade deal. Tell us about that and how the markets are doing today.
Yes, as you said, the House passed the pro-Hong Kong rights bill on Wednesday, putting some pressure to the President Donald Trump in bind as he tries to roll out the high-stakes trade talk with China. The chamber approved measures that aims to protect human rights in Hong Kong by a 417-1 margin, obviously unanimously basically passing this bill. Clearly, this is putting pressures in terms of the conditions in the Asian market, as well as most of the global equity market, because the trade talk might be postponed till next year or even not happened because of this passing the bill. If you look at the U.S. market, it has declined by 0.4%. For Dow, S&P was down about 0.4% as well. Nasdaq was down 0.5%. Nikkei was also down 0.48%. Actually, Kospi was down a lot bigger by 1.35%. As for the China, it was down slightly by 0.25%.
Well, now this uncertainty about the trade deal, we see the Korean won starting to weaken again against the U.S. dollar. What's happening there, and what's your near-term outlook?
Sure. I have expected that one to depreciate a bit because it appreciated too fast from 12.23 to 11.51, appreciating by more than 5% plus in a very short span of time. But now it has gone up to 11.77 territories, so depreciated by around 2% or so from this bottom. The reason for that is because foreign investors continue to sell the Korean equity market because of the uncertainty related to the economic growth rate, as well as the uncertainty that the MSCI index changes resulting into net selling of Korean equity versus net buying of Chinese equities. We don't think that, though, this currency rate will go back up to 1,200 level because the Korean growth rate is probably likely to be next year 2% level. And because of that, stabilizing at around 1160 to 1190 range will be most likely case for the next 6 months or so. But continuation of concern about the economic condition lingers. We do need more aggressive supplementary budget, fiscal budget, as well as probably additional rate cuts.
Right. Well, we now have the minutes from the Fed's meeting in October. They're saying they're not really in a hurry to cut rates again. At this point, do you think they'll cut rates again next month?
I don't think that they will cut another rate. This was probably the last insurance rate cut. Historically, they've done that 3 times before. 75 basis point cut as an insurance cut, and this time around they have cut it by 75 basis point in this last 3 months or so. Clearly, the economic condition is very important for further rate cuts. We think that if some kinds of deals are made between China and U.S. in terms of trade talk, we do think the U.S.'s intrinsic growth rate can be above 1.5, maybe well above 2% level. So because of that, with the current policies, we do think that U.S. economy will grow similar level of the growth rate as they've done this year. So having said that, I don't think that they will be cutting additional rates, but if the trade deal doesn't go through and tariffs are increased, then yes, we do think that the rate cut is probably necessary.
Got it. All right, Mr. Yu, thank you for joining us today. We appreciate your insights.
Thank you very much.